We have a quick question here in the Q&A section asking why exactly did we take profit at the 69.50 level for the Aussie US dollar in today's session? So I think this is a good a question to do a quick lesson on why we have specific price targets when we trade. So obviously in today's session for the Aussie US dollar, and not only for the Aussie US dollar, but also for the Euro US dollar, we had that upside bias. Now, both of them was driven to some extent by a risk on tone, but we also had positive data points coming out in the form of PMI metrics, which gave some potential upside for the euro as well. So we traded both of them to the upside versus the US dollar. We had a potential entry zone for the Aussie versus the US dollar coming in at the 69.10, 69.150 area. And for the euro, we had that entry just above the 112.80, actually just after the PMI data release. Now, the reason why we chose to take profit on the Aussie dollar at 69.50 and reason why we chose to take profit on the Euro US dollar at the 113.30 isn't because we don't think the sentiment is still valid. The sentiment is still valid for both these two trades. The reason why we took off the trades at these levels were because they offered us a high probability area in both cases where we could expect some resistance to come into the pair. Now, whether you're trading to the upside, obviously you're going to be looking for resistance. When you're trading to the downside, you're going to be looking for support. So looking at the Aussie versus the US dollar, the reason why we chose 69.50, firstly, it's a psychological price handle. So we're sitting at that 69.50 zone. Apart from that, we also have confluence with the R1 or first resistance of the daily pivot, the classic daily pivot. We also have the ADR highs sitting at the 69.60, and we have this most recent fair value highs coming in at this on the 16th of 16th of June. Sorry. So looking at this area did offer us a great high probability opportunity, or at least area where we could expect some resistance to come into the pair. Now, had we have known obviously ahead of time, remember when we traded this, we didn't see any of that. So hindsight can sometimes play tricks on our minds. When we traded this, that is the only view we had. So looking at that from all the available information, this was a good zone to either bank some pips, take a full profit, or at least just reduce some risk on the trade, which is also something we normally say. You can either choose to take your full risk at this position, or at least reduce some risk, meaning that you move your stop loss to break even, or you lock in some profit by moving that stop a little bit higher. So the reason why we always choose a set target for the daily run is we always have two things in mind. We have our normal technical tools in mind, like support and resistance areas, fair value zones to the up and to the downside. And we also incorporate that with the other tools we have, like the R1 and the S1 pivots, the ADR high and the ADR low. So this offered us a high probability area to look for some profit. Of course, yes, in hindsight, we saw the market, slice straight through that level, and that will sometimes happen. But we're happy to take off our trade for a 30 pip profit with this type of daily sentiment trade to the upside. Looking at the euro versus the US dollar, very, very similar picture there. If you followed our first videos for the day, obviously, the way I traded this personally is I waited for the PMI metrics and jumped in, and I got a fill at around 112.83. How I traded this is I took two positions. The first one I took off at the R1 pivot, again, because we have this most recent high, as well as that 113 psychological level and the R1. So we have a high confluence area to expect some resistance, but I didn't expect that to have the only thrust to the upside for the pair. There was reason to believe this pair can continue upwards due to the sentiment in play right now. And the second target we have was at the 113.30. Now, why the 113.30? We have the 113.50 just above that. We have a very significant daily trend line also extending just above that area. We have this most recent highs going back to the 16th of June, the 12th of June, and we have the ADR high. So we have a confluence area here, a zone where we can expect at least some resistance to come into the pair. Does that mean that we think the sentiment stops when it reaches this level? Of course not. It just means that this offers us a great opportunity to bank some pips, reduce some risk with this expected move to the upside. So by no means do we think when we reach these levels, the sentiment will automatically go away. As long as the sentiment is in play, the pair can continue inching up higher. But when we take these type of day trades, we're always looking for that higher probability zones that gives us the highest probability and highest conviction to look for some potential resistance or support if we're trading to the downside for the pair. So I do hope that makes sense. Any other questions with regards to this, don't hesitate to let us know.